Well, on silver, this may very well just be a dead bounce. Dead bounce. Maybe not something to jump for joy. Oh, like the old girl here is doing on her BMX bike. I mean, I don't know. It's cause for some kind of celebration, maybe, but it may just be a dead bounce. Silver's been up a lot today, right? Anyway, but I'm going to state something else here because, well, first off, I'm going to get into something here real quick, but something else, common sense about the markets in general that it could have went either way, believe it or not. But this is the Chinese Shibor, like LIBOR, like LIBOR is London Interbank Offered Rate, and Shibor is the Shanghai Interbank Offered Rate. Now, you notice they had this big super spike, and actually I think this problem's been resolved. The Chinese central bank intervened, but boy, this could have been a major problem. See, the spike went up to like over 9%, but a lot of people don't realize about the actually with the LIBOR, if you have like a loan agreement and actually in the loan documents, a loan covenant, you'll see a lot of times what the interest rate is going to be on a major construction loan. There's a lot of major construction loans out there in China, right? A lot of times the documents will say prime plus a certain amount or LIBOR plus a certain amount. So, typically a lot of times you'll see LIBOR plus a certain amount or prime. One of those two. It's not like a set rate, It's that plus that. So this will actually affect all the loans out there. Like, in other words, if this held, if this held at 9%, all these major hundreds of millions of dollars or whatever the hell it's in yuan or whatever, they would have to be repaid back like at 10 times the interest. So this couldn't have held because this would have broke the back of a gazillion companies out there, believe me. Now, the world of finance is extremely complicated, but I'm going to say you one thing. It's a labyrinth, right? Whole girl here is going through a labyrinth, but I'm going to say one thing that's actually simple. But, if you knew this information, you'd have to keep your mouth shut. But, if we knew what Ben Bernanke was going to say, oh, you'd make $1 million, like in no time. I mean, millions. You'd be making $1 billion, for crying out loud. I mean, the sky would be the limit. This guy's got so much control. And actually, why did really all the markets start heading down south? It's because he was talking about taper. He was just talking about it. He wasn't even saying it's in effect now or he just talked about it. But, if you look back in 2007, not 2007, 2012, when people were just talking about QE, it caused the metals to go up. See, it's like the rumor gets the psyche going, and people react that way. It's an emotional market. Now, China is like this Chinese girl having a bike here, which is actually a Harley-Davidson motorcycle chain. This is pretty much overkill for a bicycle, but anyway, she's riding with it. But, I'm going to say one of the big keys is going to be China, because China looks like the slowdown they've been talking about for well over a year. They had the crash in the real estate and markets and the construction boom. It's going to continue, and it's a lot worse than they think. The 7.5% growth rate Chinese government showing is total BS. So there's a lot of pressure off the commodities itself. Now, silver is a weird animal. Silver, it's like, I'm going to point something out here on one of these charts. This is a gold chart with the red, and this is the Dow with the black. And I'm going to make a statement here, and it's not as ironclad as the statement I made with some of the oil predicated upon certain things in the Middle East. But this many times when people are extremely fearful of the markets, and then they get fearful of the currencies. If there's going to be devaluation of the debt rating of a country or something, they run into gold. And that's what happened here in 2011 around August and September. This was the gold market in the red. It was way the hell up, and the Dow was way the hell down. The S&P was way the hell down. And now we have the opposite effect occurring. We have the opposite effect occurring. So, I'd almost be able to suspect that there might be a turnaround coming up, because you're looking at this. I mean, I don't know if this is the bottom yet in gold yet, because actually there's been predictions of 1,200 gold, 1,200, and it's a Societe Generale. It's one of their predictions too. Even Jim Rogers talks about that. So even looking at these markets back there, but just almost like compare this Dow chart here, the black line back here in 2011, to what's going on with gold today. Gold can dip a little more, but the markets can drive up a little bit more. But it's almost like you might see 2 years from now the opposite effect. And you're going to be fearful of selling your gold and your silver then. You're going to be fearful. Right now, it's like depressing, it's like everything's going wrong and everything. It's a complicated market. But I also want to say this. If Ben Bernanke started talking QE like old Abe was from Japan, the markets would have flew up. They would have flew up. The gold and silver would have flown up. This guy has the power to freaking kill it one way or the other. This is what's amazing about this deal. I'm not just saying that because I'm pumping the metal, but we really didn't know what Ben Bernanke was going to say. He's talking about taper, and right now we got this bounce. I don't know. Right now it's almost like maybe people are getting fearful of the equities now. So who the hell knows? Maybe there's some real people just moving into silver and gold right now because they figure it's cheap, and maybe this will be the support. There's like 2 major lines in the sand. One was like 21, 22, and the other one is like 18, 19. Those are 2 major lines in the sand. But considering it's an electronic market, I'm really kind of wondering if any the sky's the limit one way or the other. Silver can freaking if silver can go to 8 or 12, it can go to 300 or 500. Because that's the way I look at it. That's the way I look at it. Because the markets are making no sense at all. If one key thing, even with the mines, I want to point out is that it's like you cannot get stuff out of the ground without using a lot of energy and a lot of diesel fuel. And right now you could say, yeah, there's plenty of oil out there. They found this much oil. They got this much everywhere. Problem is, it's a lot more expensive to extract. They got to inject gazillions of amounts of water into the ground to extract oil now, and they don't have the actual water to do it. Up in Canada, they actually have problems where they're going to run out of water before they run out of oil, and they're not going to have enough water to freaking people to use for the people in the cities. So it's like this. You're not going to get the stuff out of the ground, even with existing mines. If these prices went down really, really lower from here, they're going to lose money even on a day-to-day operations. So, this electronic market, and it actually hints at something else that's going to come up in the future. This is why Mark Farber's, I've mentioned this guy a gazillion times, but this is why he's got gold. It's not exactly like a get-rich investment. It's almost like a last resort protection investment because he thinks, and this is the way I'm thinking, there's so much BS out there in the financial markets and it's so freaking rigged that the whole system's going to be, it might have a catastrophic freaking collapse. And that's why he's got physical gold in different countries. So, that's what this investment's going to be playing out as. He should be actually adding or doing, or just staying put or whatever. You should not be selling. Never sell. Never sell until the price gets way the hell up there. And, that's going to be scary because you're going to be thinking when the price is way up there, it's like crazy to think it right now, but it's not that crazy because it could have been going up if Ben Bernanke said something totally different. If he was making speeches like old Abe was and from Japan and saying we're going to have $1.5 trillion in dollars QE versus $1.5 trillion in yen QE, I think the markets would have been exploding in metals. They would have been. And it is that simple. But the thing is, you don't know what he's going to say. So my hunch on this deal is that he's going to have to actually say some things that calm the markets down, because this is good news today actually, because we're seeing the metals bounce, and I have not seen the markets recovered really much. They're really still down a little bit. Oil's gotten killed and all that stuff, but it was up to 98. Now it's down to 93. But it's like this is actually a good sign, because what I'm looking at is when I'm seeing the Dow getting killed like this, because this is what they're concerned about. They're not concerned about the metals. They're concerned about the S&P, the Dow, and that type of stuff, because that's where most people have their money, and they're getting killed. So he might talk it up a little bit more with the QE, that they're not going to taper off. And I don't know, maybe he could actually, his words, Ben Bernanke's words, could move this entire metals complex up fast as all hell, like in a heartbeat. As a matter of fact, when we're sitting at about just below 30, if he started talking up QE the way they are in Japan, this thing would have flew up to like 40 something. Serious. That's what would have happened. We don't know what this guy's going to say. That's the problem. So, this could be just hang on for the crazy ride, like old girl here, because it's like, it's not something you're not going to freaking. I'm going to tell you this. When silver goes up a lot, you're going to be scared as all hell to sell it. It's actually going to be tougher on you to sell it than it is right now, where the price is low right now, and you're scared that it's going to go lower, and why did I buy this shit? And a lot of people are thinking now, why did I buy this stuff? Because it's going low. It hasn't done nothing to me for the last 2 years. But I'm going to leave you with this. When it goes up, and it's not going to be if, when it goes up a lot, you're going to be more emotionally attached to this metal so bad, you're not going to want to sell it, and you probably should be selling it then. And everybody in the world is going to be saying, what are you going to do? Put it fiat money? Oh God, I'm not listening to that garbage, but I know I'm going to get attacked later on that deal big time, but it is going to go up. Now, is this the bottom? I don't know. It's like I'm more bullish on the metal today than I should be, because I could have figured it went going a little bit below 26, but 21, 22, I didn't think it would go that low. But this is a line in the sand. 1819 is another major line in the sand, and it all does depend on what Ben Bernanke says. I'm just going to leave you with that, because Ben could have made the metals fly up if he started talking QE up like they are in Japan. It would have been jumping for joy like old girl here is right now. So you can figure this is like us. Silver's a wild ride. and this girl on his bike is just like us hanging on to silver. So, it's like a wild ride on the way down. It's a wild ride on the way up. But you're going to be more scared of it when it's up. You're going to be more scared of it then. It's going to be more emotional for you then when it's up than it is now. Believe me.